Hello, hello, hey everyone. We're back again with, I guess, the first chart logic of the year, 2023, where we go over, if it's your first video here, it's basically where we go over, what happened in the market and kind of what makes sense logically to occur so that tomorrow or the ensuing days or months you can use the similar logic to see how history repeats itself, and be able to take advantage of a similar trade or a very similar trade, and see how to go about applying that in your charts and in your logic, right? So for today's video, it's essentially going to be a pretty straightforward one. Sometimes when you reach resistance or you reach a level of support, it does exactly what you are asking it to do or what makes sense for it to do, right? So if we just take a look at the overall trading for this morning and then leading into later on what ends up happening, you could start to just take a look and see what, again, makes sense. So if I were to just go ahead and I can leave these here, right? This is just the hourly on the NASDAQ, as well as I may take a quick peek into the gold as well, because I did end up trading both. Where is it? There we go. There we go. Gold was a little bit on the more difficult side as opposed to NASDAQ. So let's actually start with NASDAQ. So today's trading, if we go from a top-down analysis, we start with the daily. Not a lot is happening on the daily, right? Not a lot is happening. This past, since basically Christmas range, it's been stuck in this 10,950, 10,750. Like, not a lot of overall movement is happening. It is currently sitting at some form of a support overall, right? So that may limit the downside. Okay, so that may limit the downside overall, but that's essentially it, right? So, and now if we look at the hourly, we could just look at some resistances and support areas and just kind of draw those out. So prior, we've had, sorry, and you guys know I like to one take this, so I'm not even going to edit that out. But excuse me. But so what I would like to bring to a point is this resistance here. This resistance here seemed rather important, right? For the mere fact that we got a rejection here and we broke all the way back down to here. And then in other scenarios, we've seen where the buy up into this range, this 1101-ish, where we see some rejection. So if I come here and I drop that right there, right, we could see where all this scenario, all this magic is happening as of right now, right? Because we've seen it as a resistance prior, and then again, more resistance areas of indecision, lots of doji candles here. The chart didn't really know where it wanted to go, and then a form of support as well. And then in other cases where it just slices straight through and breaks all the way down to where, right? So, and then in the most recent example, what is this? The day after Christmas, that Monday, we have this sell-off portion here and heading into Tuesday. Or mostly the sell-off is in Tuesday, actually, but the rejection occurred on the Monday after Christmas. So in similar fashion, we look at today's trading, the 3rd of January, and we see, hey, that buy up or this push up, and I could just hide these real quick. I'll delete this one, that's fine. But yeah, that push up leads directly into this rejection zone here, right? And then we get that push back down. We dance right over here, right on the level I literally just deleted. and then we push right back up for the continuation into, let's say, maybe let's look at the 15-minute now. So what we could do is, and like I mentioned in the last video, use the larger time frames to see a general direction that will move over a longer period of time. So if we look at the hourly and we see this candle close here and then this candle close bearish slightly after, knowing that this is a level of resistance, a very important level at that, we can start to look and say there may potentially be some selling here. And this happens at 5 a.m., right? So in most cases, I'm not even up looking at the charts at that point in time. So if I come into the charts, and let's go to the 15 now real quick, and let's say I'm up 8:30, and we're looking at the charts and we're trying to see what's going on. We see the breakdown, lots and lots of selling, and then in the morning we're coming up and we see this push up. We see the push up, but then in this candle right here, this doji candle explains a lot, because then in ensuing candles we see the rejection with a large wick to the top, kind of patching the roof, kind of saying like, hey, this is the end point. This is where the roof is going to be stopped at. It's capped out, reach resistance, if you will. And then the ensuing minutes below, if I even turn the volume on, you can see lots and lots of volume comes in, pushing down the NASDAQ heavily, right? And in that question, you may say, all right, well, where does it go after that, right? Where can we, where can I comfortably take profits and not feel like I didn't maybe, expend on the trade as much, maybe like, be able to fully grasp as much out of it and really milk it for what it is. And in a lot of cases, that break below here, where the M kind of forms, right, where the top of this one and another M, right, that break below with showing the continuation of pressure is the sign for me. And as to where it went and to where I was kind of taking advantage of after the fact was, so I definitely did not get it exactly on the buy. My sell stops didn't really fill me exactly as where I wanted to be, kind of, but I was aiming for this range here to push back down here, and I looked at the 15-minute chart, try to find another trend within it, and that's exactly where it put me to, where it could potentially catch the bottom here, and this act as some form of a support, as well as, as it's shown prior, for level of resistance, a level of like kind of the ending of the major selling of all, and then it may bounce after the fact, because that's exactly what occurs here, right? It ends up pushing down. I start to see more wicks. If I go to the 1 minute, like as I'm within the trade, kind of looking at it, I'm starting to see more and more wicks, saying, hey, we could pop up a little bit. And this area is where a lot of it starts to show some indecision. And we may be pushing up, we may be pushing down. Overall, we may fade throughout the rest of the day, but that's kind of it, right? And another quick thing that I want to touch on when it comes to trading, that, you may look at this, or someone may look at this and be like, oh, but if you bought up here, or if I move this position, if you just sold or started your short from up here and got it, and you held it all the way even till essentially right now, you'd making so much more, so much more. It's 17.1 R, our risk reward. But when it comes to trading, discipline matters, as well as your ability to understand that whatever trade that you take based on your plan, based on what you're seeing, is your piece of the pie. Understand that. And that not every day you're going to get to be able to eat the entire pie by yourself. And in most cases, actually almost never will you ever be able to eat the entire pie by yourself. Because if you eat too much pie, what happens? You kind of get sick a little bit. Your stomach not feeling too good. It's not really a vibe anymore. After the second slice, you're kind of like, it's enough, right? And then there may be days where you're like, yo, I really want some pie. I would love a slice of pie, and that would be great to end off this meal or to just have right now. And that's great. But the real key, the real point of it is to know when you've had enough pie. right? Never let greed take over. Remain methodical and trade clean always, guys. And that's it for today's chart logic. Hoping that these levels, as well as these, chart formations, are going to be great for your eyes and what you can essentially put on the charts in the ensuing weeks. But until then, the agent will talk to you later. Peace.